If you're considering withdrawing money from your tax-free savings account next year, you may want to consider doing that now in December. And here's why. Any withdrawals that you make from a TFSA will only be added back to your TFSA contribution at the beginning of the following year. So here's why that's important. So here's a sample example from the CRA, how it calculates your contribution room. So you've got your starting contribution room in this example as 2023, 6,500, minus any contributions you make throughout the year. So that reduces your balance to 5,500. But you'll notice at the end of 2023 in this example, it did not include withdrawals made in 2023. Those were added back at the start of 2024. Well, that may seem like a temporary problem. If you've made withdrawals in 2023, assuming that they're going to be added back right away and you contribute too much too quickly, then at least for potentially multiple months, you could have over-contributed and as a result incur penalties because of that. So it's a really easy mistake to make, even though you may think that you've got plenty of room or that you've withdrawn money. The problem is because it doesn't kick back into your TFSA contribution room until the following year, you could still potentially over-contribute. So for example, if you're looking at making a withdrawal from your TFSA in 2025, but you decide that you don't want to go ahead with your expense or whatever it is you wanted to use that money for, and you want to add it back to your TFSA. If you add it back during 2025 and you don't wait until 2026 when it gets added back, the problem is you may not have that much space, enough space to do so without incurring penalties. Let's break this down into an example. So let's say at the start of 2023, we had $10,000 in contribution room. The annual increase that year was $6,500. We made $5,000 in contribution, so we added that to the TFSA. We took out $3,000. Our ending contribution room, assuming there were no withdrawals in 2022, would be this $10,000 less our contributions of $5,000, and then we add back the $6,500 for the annual increase. So we've got $16,500 less the $5,000 gets us $11,500. So this withdrawal does not play a factor in this calculation at this point. Now, let's say in 2024, we're taking that starting contribution room. We've got $7,000 for our annual increase. Let's say we contribute $6,000 and let's say we withdraw $4,000. So now our contribution room is going to look as follows. We're going to take that starting contribution room, add our annual increase, and then add back the withdrawals from the previous year and subtract the contributions. So as of the end of the year, we've got $15,500. So again, that's going to be our starting balance for 2025. And now the annual increase for 2025 is also $7,000. And so how this calculates now, I'm going to copy this formula down just to make sure we've got the same logic. So if we make no contributions, then we'll have $26,500 in ending contribution room as of the end of the year. So here's a potential problem that you might run into. So let's say you want to take out, let's say $30,000 because you want to spend it on a home repair, on a vacation, whatever the case may be. So you take that out in January. So we put withdrawals as $30,000. As you can see, that has no effect on the contribution room because it's not going to kick back into that contribution room until 2026. So let's say January, you pull out $30,000, and it really doesn't matter. It was January, February, March, it doesn't matter. At any time throughout the year, it's not going to get added back until 2026. Now, let's assume you take that money out in January, and then a few months later, you decide, you know what, you don't want to go through with it. You want to instead buy a stock. It's a great deal. You want to add that back to your TFSA. So now you contribute that $30,000 back. And the problem is now you're in negative contribution room, right? So now you've over contributed per the TFSA, per the CRA, because that withdrawal is not getting added back until 2026. Now, if you make a smaller withdrawal in contribution, let's say it's only $25,000. In that case, you're still technically okay. But if you go over that amount, then you can easily end up over contributing to your TFSA, because if you ignore the fact that that withdrawal doesn't get added back until the next year, then you could potentially be in trouble. So let's say instead of doing this, let's say we still added back $30,000, but instead of withdrawing it in 2025, we withdraw it in 2024. So we added this 4,000 and it becomes a 29,000 because we have that 4,000 that we already did plus 25. We've got 29 or 34,000, I should say 34,000, writing back 30,000 into here. And so now we're still okay. We have plenty of contribution room because that 30,000 plus that 4,000 we already withdrew in 2024, that gets added back to 2025, and so we're okay. So that's the advantage of doing the withdrawal before the year comes to an end, because that contribution is going to be added right back to the next year versus if we wait and do it in January. So if we did that, obviously 4,000, 30,000, it does not help us for 2025. So there's a calculation that you can do to help you to determine, whether you should take your withdrawal out now or wait until the next year, or if you're sitting on the fence, you're not really sure. So I would say, look at how much you may need to withdraw. So let's use 30,000 as that example, and then calculate how much your available room is. So that is the balance as of the end of, in this case, 2024, what you calculated it's going to be, 15,500, and then factor in the annual increase for 2025, which is $7,000, and then the withdrawals, other withdrawals that you made in 2024. So we have that 4,000 withdrawal in 2024, and basically if this adds up to more than how much you're planning to withdraw, then you're okay. But in this case, we've got 26,500 versus 30,000. Right, so in this case, we would see that we have a problem because we're planning to withdraw 30,000, but based on our calculated available room, the increase for the new year, and the other withdrawals from the current year, we only have 26,500. So in this case, that would signal a red flag that maybe if we're not 100% sure that we're not going to recontribute that money back into the TFSA, then maybe we should do that in December. And if you've got money sitting just in your cash balance, you don't have to sell stocks or anything like that, then it's a really easy thing to do, because if it's just sitting as cash, I would say just pull it out and leave it in your account. And then if you decide later you want to add it back, you can do so without worrying about this potential problem of over contributing. Now, obviously, if you've got it sitting as a stock, you'd have to sell it first and then incur potential gain or loss, and then withdraw it out, then maybe that's not as cut and dry of a scenario. But if you've got cash that you're not sure of if you're going to need, and your contribution room may not be large enough to absorb that contribution next year, should you decide to contribute it back after withdrawing it, then what you may want to do is consider withdrawing it in December before the year end, so that way it gets added back. But if you have to sell shares, maybe that doesn't make sense because you don't want to maybe sell at this point in time. But if you've got money sitting there that you're potentially going to need for something else, but you're not entirely sure, December is the best month to make any sort of withdrawals for your TFSA, just because it's going to get added right back to the next year. And as you can see, even though you may think that you've taken out that withdrawal in January so you can recontribute it back, it's not going to help you until the following year, which is why it's really important. If you're on the fence, you're not sure about whether to withdraw the money, whether you're going to need it, it's better to be safe than sorry. Do it in December before January. You can always add it back should you need to, and at least that way you don't have to wait several months, maybe an entire year, before getting the benefit of that withdrawal being added back to your contribution room.